Hi, greetings students. So in this video we are going to do creditors reconciliation statement. So creditors reconciliation statement, guys, we are reconciling the books of our supplier together with the books of the business. Okay, so we are going to have what we call it creditors control, which is ledger account, and we're gonna have a list of creditors. List of creditors is contain our supplier one by one, and the other one, which is creditors control, is contain all the totals of those supplier that we have under a list of creditors. Okay, so let's start. So they said the bookkeeper of Blue Water Trader made errors when posting the creditors control account on 30 March 2022. The balance in the control account did not correspond with the creditors list extracted. In other words, total here must be equal with the total under this one. Okay, then required obviously is this one and this one. So it's information number A, guys. They give us a general ledger, but which is not complete, which is not correct. Okay, it's 17 marks, and the list we're gonna do it and get 18 marks for that. Okay, now let's start. We also have additional information. Okay, before we go to additional information, we can start with a simplest marks that you need to get, guys. Okay, as you can see, the opening balance, we're just gonna open it just like that. Remember, creditors control is liability, and liability increase on the credit, so your balance must always this side. We're gonna have balance, and the amount we're just gonna copy it as 4,308. Very simple, just like that. 1 marks for that, and the other marks for free, guys. You have to go to your list, debtors list, creditors list, open a bracket, all of them, and what you need to do is to copy whatever that you are given. For example, PE traders, they give us 3,890, 1 marks for that. Together store, 1,300 marks for that. And Lindy Trader, 4,512 marks for that. And number one, 3,100. But you can see that France distributor is 360, but on the debit. Remember, on the debit under liability is a minus, which means that even here is gonna be negative 260. He's the only one person with negative. The rest is credit. Simply means that credit is a plus, debit is a minus, just like that. So already you have 1, 2, 3, 4, 5, 6 marks just to copy. Okay, now let's go to additional information and read. Invoice 154 received from Together Store for 1,480 was posted to the account of Lindy Trader in subsidiary ledger. So in other words, they say that this invoice of 154 belonged to Together Store, but it was posted to account of Lindy, which means that we have to go to Lindy and subtract it and add it to who? To Together Store. Okay, then the amount is 1,480. In other words, we are subtracting it here because it does not belong here, but we add it here because it belongs here. Just like that. Very simple. Okay, number 2. The business decided to transfer the balance of France distributor to debtors ledger. No entry was made. The business decided to transfer the balance of France distributor. France distributor is this one. This amount has been transferred to debtors ledger. Remember, this one is creditor, which means that this person is our supplier and is customer to us. We buy to him, he also buy to us. So this amount has been transferred. In other words, has been cancelled. Okay, to cancel 260, we just said plus 260. Then it's gonna be 0 because we don't have any transaction related to him. Okay, then this is not done. This is also going to form part of what we call general credit. Okay, let me copy this format here quickly so that we can explain it together with this transaction. Bank and discount, and other one total returns. This one you can also call it creditors allowance journal. CAG is the same. Okay, and we have journal debit, and we also have okay, we're gonna have our balance this side, and this other side we have total purchase. Okay, and the next one we have journal credit. Okay, then now let's look at this transaction that I was talking about. Remember, opening balance simply means that is the closing balance of last year. We start with it. Total purchase is on the credit because it's increasing what? It's increasing liability that we have for this year. Okay, and another simple one, a bank, when we pay our supplier, liability is going to decrease. When we return goods, we're not going to pay it, liability decrease. General debit is when, for example, if our supplier give us a discount, we're not going to pay for that amount that we've been given as a discount. That's why it's this side. This one is a balancing figure. General credit, when they say general, it's like a non-cash item. This one, it can be either, for example, like this one, it has been transferred, which means that it's non-cash item, which means that we're going to add it here, 260. And the other transaction that can be here, general credit, it can be interest. If they charge us interest, liability is going to do it to increase. Okay, the opening balance for this one, it was 1290, and when we add with this one, it's going to give us 1550. Okay, now let's proceed to the next one. The next one, they say that invoice 278 received from PE traders for merchandise purchase on credit for 2,300 was incorrectly recorded in the creditors journal as 3,200. So in other words, they made a mistake here. The merchandise that was purchased from PE trader, it was recorded as 2,300 instead of 3,200. In other words, we recorded the higher amount because it was recorded as 3,200. They were supposed to record 2,300, which means that what do? We have to subtract so that it can go back to 2,300. Okay, PE trader, we have to say minus. If you say 3,200 minus 2,300, it's going to give you the difference of 900. Let me confirm, 900. Okay, then after that we have to go to total purchase and adjust it as well. It was 44,800, and then we subtract 900. We subtract it here, and we also have to subtract it here because there was no entry that was made. Okay, then the next one, the business returned some parts bought for the delivery van for the value of 860 to number 1 Motors. The amount was correctly recorded in the creditors allowance journal, but it was posted as creditors ledger as credit purchase. So this amount, guys, they recorded it as we increase liability, and we didn't increase liability, we return. So instead of reducing it, they make it worse, which means that we are going to subtract it twice. The first one to rectify the mistake that they did, the second one, now we are recording. Okay, amount is 860 and is affecting number 1 Motor. Number 1 Motor, we open a bracket. Okay, Let me bring this one, 3,100 minus 860 minus 860. Okay, and total is gonna give us 1,308. Okay, I think for Lindy we are done. It's gonna be 332, and for together we are done. It's gonna be 2,780. And what else? I think we're left with, okay, let's read the last transaction. PE traders supplier goods to Blue Water trader and also buy from Blue Water trader, and the debit of 640 in their account in the debtors ledger is to be transferred to their account in the creditors ledger. So we have amount of 640. This amount of 640, they say that we have to deduct it under creditors ledger and transfer it the other side, which means that it's minus 640, and we go to what? Remember I said that any amount which is non-cash item, we record it under general debit or general credit, depending on whether it's going to increase liability or decreasing liability. Okay, this one, remember they say that this person, guys, is our supplier and he is also what? Our customer. So in other words, we're transferring this amount in the what? In the debtors ledger. In other words, we no longer owe this person. That's why we are decreasing what? Liability, because he took something to us. Okay, which means that we are going to add it here so that we can subtract it when we subtract under creditors control. Okay, it's gonna be 3,290 plus 640. We add it this side. But if it was transferred in a way that is going to increase liability like the other one, we were going to do it to credit it. Okay, and the amount here is gonna be 3,930. Okay, the bank was not affected, it's 34,250, and the other one here we have to calculate a total, which is 43,900, and the missing one, as you can see, the creditors allowance, it was credited on our last creditors control account. Creditors allowance, guys, is a return. Return cannot increase liability, it's decrease. We have to shift it to this side, 2108. Okay, just like that. Then if you check which side is higher, you will find that this side is the one which is higher by 49,830. Then if you take this one and subtract all of them, it's gonna give you the balance of 9,542. Okay, then you do carry down this side, brought down balance, brought down by 9,542. Okay, then here we have to calculate a total. Is 2,350, and 278 we did, this one we did, this one is fine, this one. If you add all of these, guys, you will find the total of 9,542. This amount is now balanced with this one, just like that. They must be the same. So I hope you will learn something, guys. Please make sure that you subscribe to this channel. Those who want to join our extra class, come in time and join us and enjoy other videos in this channel. See you.